Hello everyone and welcome to my channel Yaji Info Hub. In the recent Union Budget 2024, the Government of India brought in some major changes to the capital gains tax in India. So by the way, what is capital gains? Gains or profits made from capital assets is called capital gains. Examples: shares, equity funds, unlisted securities, movable and immovable assets, etc. Capital gains are taxable as per the Income Tax Act 1961. Based on the holding period and capital gains, there are two types: short-term capital gain and long-term capital gain. For classifying assets into short-term and long-term, there will be only two holding periods, that is 12 months and 24 months. The 36 months holding period is now removed in the recent budget which was announced. The holding period for all listed securities is 12 months. All listed securities with holding period exceeding 12 months are considered long term. The holding period for all other assets is 24 months. In this video, I will be sharing the information on short-term capital gain and long-term capital gain tax for the different capital assets between the old tax and the new tax regime as per the Union Budget 2024, with some example calculations on certain type of capital assets. Now here I am showing you a reference table which shows the comparison of the capital gain tax between the old tax and the new tax for the financial year 24-25 as per the Union Budget presented by the Finance Minister on 23rd July 2024. Here, if you see in the table, there are 4 columns. The first column shows the short-term capital gain tax and the long-term capital gain tax. The second column shows the different asset types with holding periods inside the brackets. The third and the fourth column shows the capital gain tax in the old and the financial year 24-25 respectively. As far as the short-term capital gain tax is concerned, there is a change wherein the tax has gone up to 20% for listed securities and equity funds for financial year 24-25. But the major change is seen in the long-term capital gain tax, wherein there is a flat 12.5% tax on all asset types, and in case of listed securities and equity funds, it is taxed beyond 1.25 lakhs for the financial year 24-25. With regard to the movable and immovable assets, the old system of charging 20% of inflation adjusted price is eliminated and a flat 12.5% is charged as capital gains tax. Further, I will be sharing examples for calculating capital gain tax as per the old and new tax regime. Now I am sharing an example of how the capital gain tax is calculated by selling of shares. Let us say you purchased Infosys shares worth 1 lakh rupees in January 2023, and let's assume you sold the shares in December 23 for say 3 lakhs. Since the holding period is less than 12 months, the short-term capital gain tax as per the old tax regime is equal to 15% of 3 lakhs minus 1 lakh, which is nothing but 30,000 rupees. And if you calculate as per the new tax, the short-term capital gain tax equals 20% of 3 lakhs minus 1 lakh, that is 40,000 rupees. Now let us assume you sold the same shares in May 2024 for 3 lakhs. Since the holding period is more than 12 months, the long-term capital gain tax as per the old tax equals 10% of 3 lakhs minus 1 lakh, which is nothing but 2 lakhs. And then you have the upper limit of 1 lakh, which you minus, you finally have 10% of 1 lakh, which is nothing but rupees 10,000 rupees. If you calculate the same as per for the new tax, then it will be 12.5% of 3 lakhs minus 1 lakh, and the upper limit is 1.25 lakhs. So beyond that it is taxed. So you have included that in the calculation. So it works out to be around rupees 9,375 rupees. So it is slightly lower than what you had in the old tax regime. Now I am sharing a second example of how the capital gain tax is calculated after you sell a house. Let us say you purchased a house worth 20 lakhs in December 2006, and let's assume you sold the house in December 2024 for say 1 crore. Since the holding period is more than 24 months, the long-term capital gains tax as per the old tax is equal to 20% of 1 crore, which is nothing but 100 lakhs minus the indexed cost of acquisition, which is equal to cost inflation index for the sale year, which is 2024, divided by cost inflation index for the purchase year, which is nothing but 2006, into cost of purchase. So that will work out to be 363 divided by 122 into 20 lakhs, which was the cost of purchase, which equals to 59.5 lakhs. So that means it is going to be 20% of 100 lakhs minus 59.5 lakhs, which is nothing but 40.5 lakhs. So 20% of this 40.5 lakhs equals 8.10 lakhs. If you calculate the same as per the new tax regime, the long-term capital gain tax equals 12.5% of 100 lakhs minus the cost of purchase, which is nothing but 20 lakhs, is 80 lakhs. So 12.5% of 80 lakhs equals 10 lakhs. So you can see there's a huge difference between the taxation in the old and the new regime. So you're now paying more than what it was in the old regime. The cost inflation index data can be obtained from the Central Board of Direct Taxes portal. So every year they declare this cost inflation index. So you can get the data from there and use it for your calculation. There are some important points you need to remember. Number one, options have been given to resident individuals and Hindu undivided families for calculation of long-term capital gains on sale of land and building made on or after 23rd July 2024, where acquisition has been made on or before 22nd July 2024 and is classified as long-term capital assets. The options available there are as under. They are given two options: either calculate long-term capital gain without indexation and pay tax at 12.5%, or calculate long-term capital gain with indexation and pay tax at 20%. For long-term capital gains on other assets, the tax rate has been reduced to 12.5% for transfers made from 23rd July 2024. However, indexation benefit while calculating long-term capital gain has also been removed for such transfers. I hope this information was useful to you. Thanks for watching. Please like, share and subscribe to my channel. Have a nice day.